What's up, guys? Today I'm going to be talking about how the market moves, and this is good for any beginners out there that are getting into this, that are looking at stocks and just wondering what the absolute hell is going on. What the hell is going on my screen? Alright, so let's get right into it. First I'm going to clear this up so it looks pretty simple. This is all pretty confusing. Alright. Cool. So, how does the market move? Well, the market moves the way it does because of these people and things called institutions and firms, things of that nature, market makers. They move the way they do because of those people. If it were up to retail traders, people like you and me that are, very low capital just in here, it would look a lot like this, but times 1,000 every day, constantly. It'd be just absolute madness, just bam, but just craziness constantly, just through the roof, through the floor, back to back, just craziness constantly. So it's kind of a blessing in disguise. So first off, if you can just understand that there is a major force that's controlling these things, actually controlling these things, it'll make this a lot easier. It's made it a lot easier for me. So in my last video I talked about price action. That was support and resistance levels. What price is a stock trading at, what zone? So if we look right here, let me do a little drawing. Cool. So yeah, this is a weekly chart, by the way. So each one of these bars is a week. This is AMD stock. So we look at this little rectangle here. This is the range that the stock was trading in. And what this is your market makers, your suits, your institutions. That's what's keeping it in this range. They have positions set up to where when it gets to this point right here, it'll sell and it'll go back. And when it gets to this point right here, it'll sell and it'll go back, right? Sometimes this happens. This could be another institution shaking out another institution. It could be retail traders. It could be anything. You don't really know what it is. You can look it up, actually, but it's not really that important. But what is important is this breakout right here that kept going. That is a breakout out of the zone. When this happens, it goes against the market maker's plans. So what do? They have to buy in right here to cover their losses, because their loss was only supposed to go this far at the top of this rectangle. Now it's up here. Now it's like, now what they do is they're like, oh, just sell everything. We'll buy back in. We'll ride the wave. Make another zone to go in after until we get all this figured out. Just buy in and let's ride this wave that's inevitably happening. So cool. The wave happens, and it doesn't go forever, and it goes back into a zone. So cool. We have another zone right here. I'm gonna do another little handy dandy rectangle. Cool. So that's our other zone. That's a market maker zone for weeks. Is how the market makers. This is what the Jesus. This is the zone they kept it in. Same thing happened right here. Major breakout above the zone. Same thing happened though. They sell their position right here, buy back in, and then they go, and then they make another zone. So you got something like this. Now, where does the good part come in? Where do you start making money? This is cool. This is just fabulous information, but how do I make money with this? This is how you make money with this. You make money right here and right here, and eventually, hopefully, right here. It could be right here though, eventually. But this is where you make money. You look for these breaks above right here. For the most part, this is where you make money. You look for these breaks right here because you know when this happens, the suits, the institutions, the market makers have to cover their positions right here from trading in this range. And we're already bullish. See how it's going up? The trend is going up. That's a safe bet. To bet on that going up more, that's a safe bet. What you don't want to do, well, do whatever you want, but what you don't really want to do is trade in these zones. Now something like this is cool, where it hits the top and then it goes back to the bottom, but that was brand new, so you probably wouldn't catch that. And once it started going down, you would know it was the resistance, but you wouldn't know where the support is. So you could try to guess that, and hopefully you get it right in here. But it still could be a bear run. This could just be leveling out, and it could have kept going. Just like right here, it went, leveled out, and then kept going up some more. That could easily happen. So you don't really want to try to anticipate that. Unless this was a breakout, if down here it was one of these zones and it broke out from here, then sure, bet on that going up. And once it started going down, sure, you can bet that it'll go down because, if it's in a bull run like this and it shoots up, it's not just going to shoot right back down. It can. It totally can. But with something big like AMD with no crazy news happening, the SPY's looking good, the SPY's bullish, and technology sector's bullish, and blue chips bullish, everything's looking good, you can pretty much bet on this is going to keep going up, and it's not just going to crash when it makes a sharp spike like that. It's going to make a sharp spike and then go about probably halfway down most of the time, and then it'll level out. But yeah, it's not just going to boom and then boom right back down. Not this far in again. Maybe at IPO levels, early entry on the stocks, stuff like that can happen, but generally that won't happen with a solid AMD stock these days. Also, where you can make money is these crosses. I'm getting a little off topic here, but it's a strategy. So these crosses, sometimes when these crosses happens, and these lines, what this line is a EMA, is a exponential moving average over a certain period of time. This EMA is at 9. This EMA is at 21. All that means it's a line measuring the average price over 9 days and 21 days. 9 and 21. That's all that is. And usually when a cross happens, it's not, well, in this case it wouldn't be good because it's going down. But when this cross happens, my dog's having a nightmare. When this cross happens, it's good. It means it's bullish, and this right here, this is good stuff right here too. How it came down, tested the line, and then went back up. That's a good, I like to buy at those. Because this right here, going back down to this orange line, that's called a reversion to the mean. And a reversion to the mean is better explained with this pattern. It's when it shoots up from the baseline, but it reverts back down to it. So you can play that. You can play that too. You know that when something gets so far out there for so long, it's got to come back down. All right? So you can play it like that. And you can play it in the opposite way. You know that when something stays in here for so long, it's got to move out. It just can't hang out in this range. It's impossible for it to hang out in this range forever. So as soon as you see stuff like that happening, there's your signal. And this applies to any time. This doesn't just apply to this weekly. This goes all the way down all the times. So let's go to the 1 hour. Each one of these bars is 1 hour. Okay, this is a day. Same thing, we got this cross right here. Beautiful, beautiful. Now it's reverting back to the mean. You don't want to buy in here. Okay, this is going to keep going until it lays onto this orange, and then something will happen. And another test right here. See, it crossed for a second, crossed for just a second, and then it went way back down. Great strategy right here. Again, this is a 9 EMA and a 21 EMA. You can do this on your phone. I got these backwards. 9 and 21. You can do this on your phone. Like, this is like I have a full-time job, and I do this on my phone for, well, not entirely, but if I wanted to, I could. All I would need is these two lines right here to make some pretty good plays. And a 1 hour chart, the 1 hour, 4 hour, and a daily, and I guess a 30-minute. Well, really, I look at all the time frames, but yeah, just give me these two lines right here, and we're making money. We're in business. We're in business. Everybody else is doing this, so that's why it works. The institutions and everybody, they use these lines too. More so retail traders tend to use these lines. Some institutions do, though. Some firms do use your exponential moving averages and Fibonacci. Actually, a lot of firms use Fibonacci levels, which is pretty much, well, I don't think 9 is Fibonacci. I think it's 8 and then 21. But anyway, so that's a great strategy. And going back to this, yeah, so if you are working a job and you know you don't really have time to look at this constantly, no problem. Just find these levels like this right here, and it's going to look different on the computer when I do it, but your phone has it too. I promise any trading app you use on your phone is going to have this. You create an alert to let me know when it's below, at or below that line right there. So I'll get a notification on my phone that says, hey, your stock's below this point. You might want to buy in or sell, whatever your position's saying, you know, whatever your interest is. And same for right here. Go ahead and set an alert. I want to know when it breaks out of right here, and all the institutions have to cover their losses and buy in to cover their loss. Or I want to know when it goes right here, and all the institutions have to buy in to cover their loss. They have to buy short. They have to bet that the stock's going to go down, or they have to bet that the stock's going to go up for a little bit so they can make some of their money back. That's what they do. That is literally what they do. It's been like this for 30 years. It's not going anywhere anytime soon. It's working great for me. I've been doing this for 4 years, and I've never been this consistent. I've never been consistent for 6 weeks straight. Just green for 6 weeks straight. It's been pretty great. It's been pretty great. And it's so simple, but a lot of it really is psychology. People have different analogies for the stock market. Some people say it's like a game. Some people say it's like a job. It's a little confusing, but you know, once you do it for a while, it's nothing. Once you put in so many hours, it's second nature. But what isn't second nature, what takes a lot, what really makes or breaks you into being a profitable trader or not, is the psychology. And you need to understand that when you win and when you lose, there's a lot of emotion going on there. And the stock market is, it's kind of like a drug. It's very mysterious. You wonder what it's like. It affects everybody differently, and you can get addicted to it. And when you get addicted to the feelings that it gives you, it really throws off. It really throws you off. Things get out of control really quickly. And seriously though, some people, they can do something. They can try like a sip of alcohol or something, and they'll be like, "Oh, that's fine." I could see myself drinking this, but it's not really something I'm going to get too deep into. And I would apply that same mental fortitude to trading. And when it comes to making money and losing money, especially. Because you have to be able to win money and shrug it off just as easy and just as efficiently as you can lose money and shrug it off. You've got to be able to emotionally handle in the same way a $5,000 loss and a $5,000 gain. You have to stay neutral. That is how you beat yourself. It's easy to beat the market. I just showed you how to beat the market. It is extremely easy. Like that right there. I mean, geez, that will. You're good. You're good on that. You're good on that. Just do that strategy and you're good. But you're going to run into problems because your emotions are going to get you all out of whack. And we've took kind of a spin here, but it's just hear me out for a second when it comes to the emotion, because a lot of this is me trying something new. All this red, a lot of this is just getting in the flow of this new frame of way of doing things. Some of it was still leftover bad habits though, and I've really started to you can see right here, emphasize on those bad habits, because when I saw this monthly total, I was like, good God, I've never traded for a straight month and came out green on the other side. Not like this. Not really like this. Like, usually my wins have always been like a lot, and then major losses following that. A few major losses following that. And I'm sure a lot of new people can relate to that. But what you want to see is like something like this, where at the end of the week you're green and not red. Week after week you're green and not red. When I saw this 4 times in a row, I knew. I knew that I'd found a good spot. And so hear me out when I'm telling you that you gotta stay neutral no matter what happens. And let's look for a damn good example. Right here is a damn good example. Airbnb put made $165. And you can pause the video and read this, but basically what this comes down to, these big losses. And sometimes I don't say it because honestly sometimes I don't realize it in the entirety of why I'm doing what I'm doing and why I'm feeling what I'm feeling when I'm trading. And if you ever get like a high when you're trading from doing good, you need to stop. You need to stop and get yourself together immediately. There's no room for being high when trading. And that goes both ways. You can get high from euphoria of, and when I'm saying high, I'm just saying a chemical change in your brain that's making you feel a certain way. Because it does feel like a high when you win, when you make $3,000 in a day from $80. You get high. Whether you like it or not, you get high, but you need to be able to identify that and say, hey, I'm high. I don't want to be a junkie. I don't want to let the stock market make me a junkie. I'm not going to be I'm going back to my center. You have to do that. Same thing with a loss. You take a $5,000 loss, you're going to beat yourself up. You're going to say some terrible things to yourself. But you got to remember, hey, well, first off, your first thing needs to be, I should not have put myself in a position to hurt my mind this bad. Because a $5,000 loss is nothing when you have a $500,000 account. But when you have a $10,000 account and you take a $5,000 loss, you're very high with some negative stuff. Whatever the opposite of euphoria is, that's what you're feeling from this loss. And you need to be able to identify that and go back to your center, because it's not the last trade you'll ever make. It's not the last mistake you'll ever make. It's not the only time in the world that you're not going to learn from a mistake and come back harder. You're going to do that. You just need to go back to your center. And yes, take all emotion out of trading. Just trade like a freaking robot. Like, oh, cool, boom, boom, okay, cool. This, out, okay, boom, boom, okay, cool. This, boom, boom, cool. Use your alerts. Also, just in case you get faked out, whenever it hits out, go ahead and set another alert somewhere in here, because it can come right back down. So just be prepared. Cut your losses. That's another thing. Cut your freaking losses. Don't just hold on to stuff because you think it's going to go up. Sometimes I'll cut losses and I'm like, dang, I probably could have held on to that for more money. And a lot of times, sure, I could have held on to that and actually made a somewhat profit. Most of the time, though, I'm right in cutting my losses. Sometimes I hold them way too long and I lose a lot of money. Like, here's a good example right here. Great. Just a great example. An absolutely great example. Now, granted, that is a $525 call. But still, that's like a what, 25-30% loss or something like that. 25, let's say 25. But yeah, it's these days, once it goes 10 or 15, I just cut it. Especially if we're past the reversion of the mean point. Like if it's at the mean, it's came back and hit the mean, and then it keeps going. Dude, just get rid of it. If it comes back in, just buy back in, I guess. But don't just hold on to that getting cut out like that. Don't let that really bother you too much, because there's going to be more plays and you're going to make more money. Really, just let the emotion out of the way. Like, I could have really got emotional about this, but I was like, no, you know what? It's doing the opposite of what I'm doing. I can identify that. It's doing a little reversion. I'm going to get a call. But you know what? I didn't hold on to that. I didn't get real high from winning that money and covering that loss. I didn't get real high from that to the point where I was like, hey, you know what? I did really good with this Airbnb call. I'm going to buy another because I'm just awesome, super Santa Jesus God, and I know everything. Yeah. That's going to happen to you whether you like it or not in trading, but just learn from my mistake. I'm really trying to emphasize that do not get high from making or losing money. Do not get high from it. Just let it brush right. Just let it brush right off you. Just like Elon Musk smoking a joint. I don't even feel it. Just like that. Keep that energy. Because had I not been grounded after taking that gain, had I not just brushed that off like nothing, I would have been blinded to this clear opportunity that it was just a little, that this Airbnb was just doing a little thing where it pokes out for a second, So I bet on it going down because, it was getting at the point, but it kept going over the point. So I was like, all right, I'm going to buy a call. I bought a call, sold, and the next day it's just going down. I'm like, okay, now it's doing what I want it to do. So then I bought the puts. And then I rode the puts, and I kept buying more puts too. So yeah, next day, so you can see the call did great, but then the next day the puts bet on it to go down, and it did amazing. And I think I did another one. Yeah, I did another one a few days later, and it did good. And I should have kept doing Airbnb. Oh, I did. Okay, I did another in there. Yeah, I had some good Airbnb trades right there. And then like it was reverting, and it kind of was, but it pretty much just traded sideways. It wasn't going up or down, so I just got out of that before it got too damaging. Let's see, 32. That's just beautiful. That's beautiful. That's a beautiful stop loss for spending $300 and cutting it at 32. That's what you want to do, man. That's seriously what you want to do, so you can, get winners like this and like that. Man, I'm in Airbnb right now, actually. We can look at Airbnb real quick if you want, and then I'll probably end this. But just for reference, yeah, see, it's looking good. It's above this line right here. I got my notification set in case it comes back down, and I have my other notification set. That's going to be where I take profits, somewhere in that zone. I probably honestly need to move it down a little bit, but yeah, that's how I play it. I saw what it did today, and it was squeezing. See, it's been trading sideways, and I'm like, it's squeezing. Okay, cool. Let's see if it's going to cross. Nope. It started going up. Cool. Awesome. Buy in. If it goes up the next day, awesome. If it doesn't, if it goes back down and keeps following this negative trend, awesome. I'm going to buy my puts and do exactly what I did a few weeks ago and do the exact same process over again. And I'm going to keep the emotion out of it. I'm going to stay neutral. That's the only way I can get in on this is if I stay neutral. Because what will happen if you mess up and you lose a lot of money, too much, you didn't manage your losses, you lost too much money, you're going to get really sad, and you're going to feel like you're just trash and you're never going to be good at this. And then because this happened right here, you bet on it to go down, so this happened right here. So you're like, okay, cool. It's going up. I don't want to miss out, so I'm going to bet on it to go up. And then it does this, and you're like, oh God, no, I'm just terrible. I just can't do anything. I'm trash. And then you give up, and then you miss all the opportunity. Or had you just stayed cool and been like, okay, it's going up. Okay, clearly it shot up. I'm already out of this position. If I was betting on it to go down, I'm already out because I'm not competing with this. I'm not competing. No. I'm not competing with that. You're crazy. If it was like this bar, if you replace this with that, yeah, sure, maybe. Sure, I'll think about it. I'm not competing with this. Just get out of the trade. Let it do its thing. Bet on it going up because, Jesus. Bet on it going up. Look, you got your cross right here, but it leveled out. Go ahead and get out. And then, look, we're coming back down. Another cross right here. Perfect. Buy back in. Awesome. Keeps going down for days. Couple 100% gain from this trade. Awesome. Great. Just made like $500. Just made like $500. Wow. Amazing. And then cool, it switched. Okay, cool. Back in calls. Oh, almost switched. And that's where, cool. Yeah, so. Yeah, well, I hope this made sense. I hope you learned something. I hope you make money. I hope you apply this. I hope you listen to me and don't do freaking drugs. Drugs are bad. Okay?